Hey guys, Fibonacci are universal mathematical ratios that seem to appear in every aspect of life. Advanced traders take advantage of these to get edges on their trades, but a lot of traders are using their fib tools wrong, and it's leading to losing trades. If you want to catch trades like this and make big profits, then make sure to watch this video until the very end. We're going to give you a full, in-depth guide to the Fibonacci retracement tool. And if that's something you're interested in, as always, hit the like button for the YouTube algorithm, subscribe, and turn on the notification bell to get notified when we upload a new video. Now, let's get right into the video. The first thing you need to understand is how Fibonacci retracements work. The most basic way to think about it is when financial instruments experience significant price volatility and movement. The idea is that those movements are more likely to retrace a portion of the move in the trend before continuing in the original direction. Fibonacci retracement levels act as potential support or resistance, and they can aid us when identifying trade entries and exits. You may be wondering what kind of time frame we should be using. Generally speaking, like everything in trading, the bigger the better. The smaller time frames are more susceptible to manipulation. By using higher time frames like the daily, weekly, and the monthly time frames, you can get a bigger picture of price action, and you'll find that this will significantly impact your profitability in trading. A daily Fibonacci retracement level will most certainly have a higher success chance than, say, a fib level that is pulled on a 5 or 1 minute time frame. Of course, you can use them if you're day trading or scalping, but be aware of manipulation and low liquidity. The typical Fibonacci levels that traders use are the 0.236, 0.382, 0.618, and the 0.786. Each level is associated with a percentage. When we talk about these percents, we're typically referring to a retracement of a move. So if the price is trending up, a retracement will be a counter move in the other direction before continuing up again. There are 3 important levels that I typically pay attention to the most, and one of them, sneak, isn't actually a Fibonacci number. These levels are 0.382, 0.618, and 0.5. It's commonly used as a fib number, but it actually isn't derived in the same way. However, it seems to be really successful as well, so I always include it when price retraces to the 0.5 or lower. This is what we consider a deep pullback. This concept is also referred to as premium and discount, which you can learn more about in one of my upcoming videos. In a bearish market, if the price is at a premium, then it's considered expensive, which suggests that we should be looking for short opportunities or taking profits on long trades. While if it's in a discount area in a bullish market, we typically want to look for long opportunities or to take profit on short trades. However, retracements are never guaranteed to return to the equilibrium area. If an asset is in a really strong trend with lots of momentum, then you will often see that retracements only accomplish shallow pullbacks. A good rule of thumb is to look for the 0.382 during strong trending markets before continuing the trend, while again not an official Fibonacci level. Traders usually do look at the 0.618, and this is what is known as the golden zone. This area is considered to be the strongest level out of all the Fibonacci, meaning trades taken from this zone tend to be more successful than others. Now I'm going to teach you how to actually use the tool. As always, it's important to identify the current market structure first, because in order to use Fibonacci correctly, you'll have to identify and select the correct pivot points. As a beginner, this can be difficult to determine. Luckily, there is an indicator that highlights the major swing points on your chart. If you go to TradingView.com and in the Indicators tab, you are going to search for fractals. Make sure it's the default one from Williams, then go in the settings and change the period from 2 to 5. Now I will only highlight the major reversal points. These are pivot points that you should use with your Fibonacci retracements. All traders should eventually learn to identify these on their own. The indicator is only there to aid you, and if you need to get a better idea of what I'm talking about, look for reversal points. It should be a candlestick pattern made up of 3 candles with swing highs. You will have one candle that is higher than the ones next to it. With swing lows, you will have one candle that's lower than the ones next to it. The market will usually have an impulse move that sets the overall trend. We want to get in the trend and enter at a retracement. If the market is trending up, you want to pull from the recent swing low to the highest high in order to correctly place your fibs. Signs that price may be reversing at one of these levels could be something like a reversal candlestick pattern or zooming into the lower time frames. From there, you want the market structure to align with the higher time frames. So once it breaks the current structure and makes a higher high, that's when you want to enter long. Your stop loss can be placed below the most recent swing low, and you can target the swing high to the upside. The same thing applies in the opposite direction if the market is trending down. Pull from the recent swing high to the lowest point in order to correctly place your fib levels once it reaches these levels again. You are going to wait for a reaction and then look for reversal signals. When your low is broken, you can look for the trade. Another piece of the Fibonacci puzzle are Fibonacci clusters. If you are trading with fib levels, then you should always look for confluence at these levels. This is one of my favorite tricks when trading live. One thing we can do in order to have confluence is find stacking Fibonacci retracement levels. My favorite is when I find multiple 0.618 retracements at the same price. This typically marks a key area of support or resistance and absolutely increases the success of your trade. We are going to kick it up to another level by combining Fibonacci with our support and resistance levels. When supports and resistances overlap with these fib levels, we find that they act even stronger and can give us higher confidence in entries and exits. Alright, now I'm going to go step by step and show you some examples. In this trading example, to make sure you have a clear picture, first let's look at the settings in our Fibonacci retracement. You are going to double-click it to open it up. Like we said earlier, what you will notice is that the default levels have been selected. Any combination of these is correct. I have seen people only have the 0.618, and I have seen people remove the 0 and 1 lines. It doesn't matter as long as it works for you, but in this example, we're really only going to use the 0.5 and 0.618. Right now, we're looking at Solana, and we're on a high time frame, like the daily or larger. Then we identify the macro trend. As we can see, it's been making higher highs and higher lows. So this market is trending bullish. So we are going to be looking to enter at a retracement to go long. When we want to use our fib tool, we will have to select 2 pivot points. As we can see here, this swing low has made a large impulsive move, and it's a major reversal point. So we will select our fib tool and place it at this low. Then we will look to the right for our highest point in price, and we will place our tool again. Now we wait once the market has reached the 0.5 level. We will try to identify if there's confluence with any supports or previous fibs that we have pulled. As we can see here, there's a previous swing high that has been broken and retested, so this area has become a new support area, which gives us a higher quality trade setup. We can look to enter on the retest of the previous resistance level, which has now been turned into a support. And then the stop loss will be set below this low and target the daily swing high to the upside to maximize your profit. Fibonacci is one of the greatest tools a trader can master. I highly recommend everyone take some time and learn the basics. If you know a trader that might benefit from this video, please share it. Make sure to smash the like button, subscribe, and turn on the notification bell to get notified when we upload a new video. Please check out some of the other free educational content on our channel. Make sure to leave a comment on what you want to see a video on next.